That's who you are.
That's true. Hey everybody, it's Chris Knighton, Knighton Real Estate Advisors, and I'm hearing everything about this historic market crash in the market, what's going on. The economy's failing, all these things. And there's so much BS out there, can't swear on these things, that it's driving me crazy. And you're hearing some real estate professionals talk about it and whatnot, which is awesome. I appreciate that everybody's trying to educate, and what we really need to do is understand where we came from to where we're going to. And I'm just going to show you something. It's nothing, no crazy graphics. But if we remember what happened here, does everyone remember this crazy market correction? Oh my gosh. No, because nobody talks about 2017 anymore. We had an incredible run up due to a supply and demand issue. Much like we saw in 2020, that was exasperated or enhanced, magnified by crazy low interest rates. But understanding this happened in 2017. What did we do? We saw massive growth, again right here. What did we saw? We saw a 20%, in some cases, even more of a price decrease in the market. Does anybody talk about that? No, because humans forget. How quickly do humans forget what actually happened? It's crazy. And then understanding where we are in terms of today's market. We're looking at Stony Creek stats just today, but overall on the board, we're down around 25% overall. In Stony Creek, on averages, from the highs of 2022 February to this month, last month in July, we're down around 27%. Now that might seem crazy. Oh my gosh, the market is crashing. Very, very similar to here. Now, what happened? This is the funny part. Knowing what happened so you can understand and really make sense of what happened back in 2017. If you forgot, let's revisit that. Crazy supply and demand issue. What did the government do? Smart move, in my personal opinion, for monetary policy and government practices on banking. They introduced a foreign buyer tax. They also introduced a stress test where you could still get approved for 2.7% mortgage, but you had to, or you get that mortgage, but you had to be approved and prove you could carry a lot higher interest rate in that. So the stress test, what did it do? It brought that market down. Now, when we see these prices coming down, and if you were around and you saw what was going on there, people were a little bit worried, and they thought the market was going to crash, and all these things, much like we're hearing today. So the government didn't touch interest rates. They saw that come down naturally. And then what did they do? They gradually increased over a year and a half period. It was the same for almost 4 years beforehand. They gradually increased. And then what do we see? A normalized growth curve over the last 50 years, 100 years in real estate, 3 to 7% increase on your residence was about normal. Just a little bit over inflation. It's an appreciating asset. Now, what happened in 2020, if you see the beginning part of it here, we saw a supply and demand issue again. The market was increasing. And then in March, what happened? Well, the world shut down, and we saw about a month's worth of drops for all those gains we had there. You can see right there, that was 1 month. What did the government do? Or what did policymakers do? They brought the interest rates down to historic lows in a month period. In my mind, not the smartest thing. But what did that do? Again, supply and demand issue that we already have. With some of the cheapest money that's ever been available, we saw 2 years of this low interest rate, straight down, kept there, and this line went from a normalized kind of growth curve to, oh my God, what the hell is actually happening? Until we peaked here in around February, March of this year. And what they do, they started increasing interest rates in an exact inverse correlation between the two. As interest rates go up, the market's coming down. Now that crash, oh my God, the market's crashing. If you're looking just at this, absolutely it's crashing. Just like if you looked right here, it would be crashing. Understand what's going on, because all these gains that we've had, they're going back down. We're about down 25 to 30%. In my personal opinion, we're going to go down a little bit more. Is there an opportunity for you? Absolutely. This is where understanding what's going on in your personal situation is going to be so huge so that you can make the best decision. Because I've seen people make not the greatest decisions long term because they're getting scared by what they're seeing out there. And depending on how you feel and what's going to happen, you make that decision. Is there an opportunity for first-time home buyers here? Absolutely. Our interest rates still below historic averages. You're still under 5%. We are going to see a little bit more interest rate increases, but you're still under 5% currently right now. Ridiculously low. I bought my first home about 20 years ago, paid 8%. I don't want to do that anymore. However, it's still in a great rate right now where under 5% is still relatively cheap money, and prices are being reflected in it. What we're seeing as well is inventory increasing, meaning that the amount of homes coming on the market is outpacing the amount of homes being sold. Why is that? Because I would say most sellers out there are not willing to price ahead of where the market is right now. They're still thinking they're going to get more, and they're holding out for it, which is causing them not to sell, which is causing more supply, which is then causing more downwards pressure along with the increasing interest rates. Now, that's for first-time home buyers. But Chris, I want to buy up. If you're buying up, if you're making a move upwards, whether it's a size or price, you are in the best position it's been in a long time. Because back in February, you could have got a great price for your home, but if you had a $500,000 home that increased 10%, you were at $550,000. If you're buying, again, $1 million home, for example purposes, that home went up $100,000 on that 10%, same 10%. So that delta between where you are and where you were trying to get to kept getting bigger and bigger. People were getting priced out of the market. Plus there was the speed at which you had to make decisions. People were going in firm. You're making decisions on an emotional basis. Now, what's happening is that delta is actually shrinking. Your home, even though it's lost value, so to speak, the larger upsizing homes has actually lost at a greater rate, because if we're looking at percentages, everything can be run by numbers. Your delta between those two is becoming smaller. Your next move-up home is actually more attainable now than it was before. Again, removing that ego and emotion from, I'm not getting $1 million over asking price to make a better decision. That is a perfect time for you to purchase home, if it makes sense for you and your personal financial situation. Interest rates are still, again, historically low or decent where they are right now. Prices are coming down. Last thing. Well, actually, there's two. For investors, if you're an investor, you're looking to flip, I wouldn't flip right now because there's too much uncertainty. However, I still buying property. I love buying property. It's up, down, or sideways. Long term, you're going to see that growth curve continue to rise, much like this, being aware that what goes up comes down, but over time, real estate will always continue to increase. Last thing, if you are downsizing, I would suggest if you're downsizing the next 5 years, this would be the time to do it. You get to, hopefully, if you have some great equity built up in that property you've been in for a long time, you get to take that equity. And if you want to buy something, you can buy something, usually buy it cash, and have a surplus of cash left over that you can go and invest. It's a great time to invest in the market. The markets continue to kind of go up and down and see all this fluctuation. But over the long haul, you can invest in stocks, ETFs, anything that's going to grow over time. Now, if you want to rent, if you were selling, that's a great option too, because you have a lot of flexibility. You can travel, you can do whatever you want. You can have that lump sum of cash to be able to invest or do whatever the heck you want with it. So when people are saying, oh my God, the market's crashing, this is crazy. No, the market is shifting. And I see it's a market correction, or the market's shifting. The market is always correcting. It's always shifting. Consumer sentiment drives every single economy. And if consumer sentiment is one of, I'm worried and concerned, a confused mind says no. So there's less activity out there, which just means there's more opportunity for the people that know how to interpret and know what's going on. So if everyone's scared out there, we've had a few clients that we've kind of educated, and they're like, oh my God, after this meeting, it's been eye-opening to kind of see what's actually happening, know where we've come from, know what's going on. You can pretty accurately predict the future depending on what's going to happen in the near term. So if you have any questions, I'm hoping this makes sense, because reading all the BS that's out there in the headlines is not good for your soul, your mental stability, and people are just trying to get eyes on newspapers and newspapers. Who reads a newspaper anymore? But articles on what's happening. Know what's going on, because we are correcting quite a bit. It's downwards pressure on pricing. There's many reasons for that. It doesn't mean you're in a bad position. It just means you need to understand your specific situation so that you can make a better decision, have somebody out there that's going to be able to guide you in the right way. This is it. Cheers. If you have any questions, let me know.